car talk front and center in the market today. Uber getting hit as London pumps the brakes on the ride-sharing service. Liftoff for Lyft is on an analyst upgrade, and Tesla rising on Cybertruck hype. We begin there because, as Phil LeBeau is about to show you, it may not be as it seems. Phil, what do you mean?
Well, you've got 200,000 reservations. That's how many were received through yesterday, according to Elon Musk. We haven't had an update today. But this brings up the question, how many of these reservations at $100 a pop will actually turn into orders? And how does it compare to previous models? Well, we've got a little bit of data there. Now, remember, it's a $100 deposit for the Cybertruck. It was a $1,000 deposit for the Model 3 back in 2016. Ultimately, Tesla says they got up to 455,000 reservations there. As for the Model Y, it's a $2,500 deposit. They've never told us how many pre-orders they have for the Model Y. In announcing the reservation totals over the weekend, Elon Musk said the Cybertruck orders so far, 42% of the people putting down a deposit have said, yeah, we want the 49,000 dual motor version. 41% want the tri-motor, the highest version, which will start at $69,900, and then 17% want the single motor. Remember, these vehicles are scheduled to be delivered at the end of 2021. And Melissa, we can't stress this enough. Just because there are reservations there, there's no way of knowing. At least we haven't been able to figure out at this point, and analysts haven't been able to figure out how many of these pre-orders actually turn into full orders and customers buying a particular vehicle. I've talked with people who put an order in for the Model 3, and they ultimately ended up buying it. I also talked with others who said, yeah, I put it in, and I decided I wasn't going to wait around, so I got my $1,000 back. And at this point, it's a little hard to figure out exactly how many of these 200,000 will turn into paying customers.
There's a lot we don't know, certainly, about these numbers, Phil. But when he tweeted, it's interesting that Elon Musk chose the word orders as opposed to deposits.
Yeah, and I know some people are saying, you know, is this a violation of the terms of the SEC agreement? Look, now you're getting into a real fine area here, and I'm sure the SEC maybe heard from some people who said, there he is, he's violating the terms again. I didn't read it that way, Melissa. I took at it and say, okay, he didn't write pre-orders, he wrote orders. That's how I looked at it. But, you know, some people are probably listening to me saying, oh, you're naive. Elon can push the envelope as much as he wants. I didn't take it that way.
It's interesting how I wasn't going to say on fire, but he was so active on Twitter, updating 187, 200K. Yeah. He also tweeted, Cybertrucks are last product unveiled for a while, but there will be some mostly unexpected technology announcements next year, which also seems like he's pushing the envelope.
Right. And well, but he has said this in the past, that there will be technology announcements. Look, I expect that they're probably going to have another battery analyst day, similar to what they had last year. Remember, that was the one. It didn't go over too well with the analysts who were there. They felt like they asked more questions than they received answers. Also, especially when it came to what's going to happen with autopilot and full self-driving mode. So I suspect that those are the types of things that we will likely hear from Tesla and from Elon Musk over the next 6 months or 9 months.
All right. Phil, thank you. Phil LeBeau in Chicago for us. So how do you take this news? I mean, there are a lot of holes in these numbers, or unknowns, let's say.
I'll tell you how you take it. You take it the way the stock traded today. It effectively closed almost unchanged on the day, which I can't believe Mr. Musk is all that happy about, given what he said over the weekend with all these orders. I'm sure in his mind, that brilliant mind that it is, thought the stock would recoup all the losses we saw last week and probably gain some, and it didn't. I'm in the Tim Seymour camp. I understand why people want to be bullish. I think it's had a tremendous move. I understand the cash flow story.
But you would be short this stock.
Given the choice between, would you rather long or short? I would rather be short, yes.
They're making moonshot cars by Kickstarter. I mean, have at it. I just don't get a $100 deposit. It seems like a ridiculous thing. I'm actually really interested. Last week, I put down a $500 deposit on the Ford Mach-E that's going to be delivered in late 2020, and I'd be really interested to see their execution, how that thing comes out. I suspect that thing comes out on time. I mean, this car's never going to be made. So when you're talking about the difference between orders and this and that, whatever, I don't get it. If you want to build cars by Kickstarter, have at it. But I don't think you do it with a company that's got a $60 billion market cap.
Are you going to join the bear parade here on Tesla?
I'm not. I understand it completely. And by the way, we're talking about the late 2021 on the delivery of this thing. I mean, we're not talking about, maybe, if that's even close to the number. I still look at it as, we talked about at the top of the show, implied volatilities have gotten tamped down, extremely down. And now on the put side, and something like Tesla with the shorts that are still existing out there, you're still going to look at some nice premiums. On the call side, on the other hand, you got a little bit of room there where you can put on some spreads that are very inexpensive for any kind of squeeze to the upside.
Have you done that?
I haven't done it, but I was looking at it today.
You were?
Yeah, I absolutely was.
What would the catalyst be in your view?
Just the continuation of the fact that all this news, and not all of it's been great news. Matter of fact, very little of it has been. And yet, look at where the stock is. And you always say this all the time, Guy. Hey, you know what? The reaction of these things is what really matters. The reaction so far has been this stock moving to the upside.
But hasn't the news been great? I mean,
has it been great?
If you're following Tesla over the last couple of years, the news over the last 3 or 4 months, and most notably that around the earnings cycle and the cash flow and the profitability of the company, to me, is all you could want to hear. Because this other stuff doesn't even make any sense. I mean, they had 273,000 Model 3 orders in the first weekend as well. That was awesome. And if you think that equates to demand, but I think the news, as someone that's not bullish, has been bullish. And therefore, I think this is.
But the interpretations that we got in their most recent report, the interpretations we got for the most part weren't all that positive.
Of what?
Of their earnings. I mean, when I say earnings, when we're talking about the actual numbers themselves that Tesla has. Those numbers are still very suspect and very interesting to look at, and not everybody thinks it's bullish.
Said. Well
All right, let's shift gears, so to speak, to the ride-sharing space. Uber falling after London stripped the company of its operating license, citing concerns over passenger safety. Separately, Lyft catching a bid after Loop upgraded the stock to a buy. The firm projecting that Lyft will break even in 2021, thanks in part to a better competitive environment. So is Lyft the better ride-sharing play here? And specifically in the Lyft upgrade, what was interesting was that the analysts had mentioned Uber being caught up in all these sort of international battles.
Yep. Well,
like
look,
London.
I think Lyft has chosen a format to play on a local level that's actually worked. They're certainly not expanding their business line. We talk about that all the time. It's the pure play. And if you look at how the stock's performed, this is one of those dumpster dives that actually it didn't just start to turn. This thing started to turn about 2 months ago and is up 30% in about 35 sessions. So at some point, though, I think this was very overdone, very much short selling and some of a squeeze. It's hard to get excited about profitability, even though they've given you some sense. Late 2020, who knows?
It's a super dud, though, according to Carter.
Yeah, well, I mean, here's the thing, right?
So get Nathan in there.
When you don't have
No. Sorry, Dan.
No, but when you don't have a profit story to talk about here and now, you got to hear consistency from the management. And I think Lyft's management has been consistent about when that's going to happen. So, this stock bottomed out at $37 about a month and a half ago. It's trading at $49. It IPO'd at $72. It traded as high as $88. I suspect you see a little bit of a short squeeze. I think when you see Uber dealing with some of these issues globally, I think it probably makes some investors who love the rideshare, gig economy, all that sort of stuff. You said, let's stick it right to home. Let's hear how they dealt with the California regulation issue. I think they were very transparent about that sort of thing. It's just an easier story to handle right now, in my opinion.
At what point do you think Dara Khosrowshahi has a problem? Because you've been critical of Dara after the Axios interview, after the exchange on Deal Book.
Yeah.
You have this now.
I think this is a company where I think the board, I know there has been some turnover. I think they still have issues. They're all in behind Dara right now. I mean, listen, this is a very complicated story, and I think it's one that, they can't even put their finger on when they kind of say they'll be profitable. So to me, I just think Lyft is a much, much easier story right now to invest in if you like the idea of rideshare on the way to autonomy.